Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. This week the Australian dollars rolled out into a bearish start as the market plummeted to an intraday low of 69.24 before rebounding into the European session. A slightly oversold indicator, however, the market is still somewhat in a weak pattern due to the Friday sell-off. That is, we could see another down test, that is towards 69 cents or around 68.45.55 before any potential correction. Looking at the euro, the market plummeted closely to the level of 103.40 40.60 area in light of the recent sell-off that we saw back in early May. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallies to a fresh 105 high, that is on Friday, and still was there early this morning. The market may actually see a little bit more volatile this week. That is a big week. We've got the Bank of Japan rate decision. We've got the US Federal Reserve rate decision. We also have the Bank of England. And along with that, we've got the Australian job numbers. So it is quite a volatile week in terms of data. However, if the market can stage a recovery, and we do see a little bit of a weaker play in the US dollar, then we could see a short-term recovery back to 105. Nevertheless, the bears are still lurking, and no doubt we might see another down test. On Friday, though, a higher than expected US Consumer Price Index, or CPI, figure came out, which has boosted further confidence. The fact the market is looking for a 50 basis point rate cut this coming Wednesday when the Fed announces its rate decision. After seeing a 40-year high, the CPI hit 8.6 for May. So the market was very jittery right across the board. Even saw the stock market with the S&P going into bear territory. The dollar yen market is close to posting a tri-star. That is 3 dojis, but this last one not quite the doji that I was hoping for, but still from the pattern can still see a further weaker play. That is, if we see the market take out the support level of 133.40, this would expose the region back to 131. Sterling very weak, as you can see. The market plummeted. Now down, if we go to weeklies, to a key level which is seen at 120.70.90. As long as that level holds, I feel there could be a rebound in the market. And keeping an eye on this pattern, there is some divergence when it comes to the weekly, so we could still see a possible rebound. And also, the Bank of England could see 50 basis point rate rise. May actually give a bit of encouragement for the bulls to return. Sterling Kiwi, after plummeting away from that 195 area, still looks destined down towards the region of 193.30 or 192.30 maybe, with the top side seen around 194.55 as a short-term cap. Gold plummeted away from that key level, 1,878 to 80, and from the rejection crumbles the support level, that is, around 1,825. With a slight rebound coming into play here, could see a retracement back to 1,837, but I feel the market will fail and maybe see another down test. Finishing up with oil, well, the market did take the challenge back to 115, but didn't quite break it. And from the rebound, still looks close to further challenging this level. After the rebound may actually run out of momentum as we get closer towards that top side around 121.25.80. If we do see a similar pattern, then I do anticipate this challenge to the downside. That wraps it for today. Thank you very much for joining me. As always, look out for the interest report. I hope you enjoy the rest of the day.